Welcome to the market recap presented by Tackle Trading. Get in the game. Recap presented by Tackle Trading. Get in the game. Recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for the 5th of November. And things were kind of boring. I mean, there was some movement in the market today, but definitely a fair amount of not a whole lot of exciting things happening. As it seems like maybe we're kind of waiting for the midterm elections that are, of course, going on tomorrow to give us a little bit of clarity. Dow up a little bit, NASDAQ down a little bit. So it wasn't completely a wash, but really for the most part, one of those days in the market that, and that's okay, right? Those days, we need those days too. I'm looking ahead on the earnings front here today after market close. A handful of S&P companies, including Marriott, as one of the bigger ones, Mosaic Company, coming out after market today. And then, of course, tomorrow before the market open, another dozen or so, including Eli Lilly, AmerisourceBergen, Archer Daniels Midland. So certainly a few companies, CBS, I don't want to miss them. A few big name companies coming. As we know, we're pretty much on that tail end of the earnings season. But you got to make sure you get in the habit of double checking, because we'll see earnings almost every single day in small numbers, right? Earnings season or not. So it's a really good idea to get in the habit of always checking those earnings. You never want to wake up and wonder what the heck happened. Oh, whoops, it was earning. If I just would have checked it, I would have been all right. So that is definitely something we want to be keeping an eye on. Of course, the election's kind of the story that's probably moving the market in the next couple of days. We also have the Fed meeting a little bit later in the week as well. Of course, remember, the election's aren't going to be determined tomorrow during market hours, right? There's going to be plenty of stuff going on as the day progresses. So that might be something that's going to have a little bit more impact on Wednesday's open. Maybe it has an impact tomorrow on the trading day too, but definitely expect it to have something going on potentially on Wednesday morning. So we'll definitely want to be up to date on what's going on over there. As we take a look here at the S&P 500, as you can kind of see, very back and forth, closing up a little bit, about 0.5% on the day, kind of smack dab in the middle of those two shorter term averages, the 9 EMA and the 20 simple, pink and red respectively, still well below the 200-day moving average. From a broad perspective, and specifically talking about the S&P, we didn't do anything really to trigger in that bearish, or potential bearish movement. We didn't break the intraday lows or anything along those lines. So I think we're pretty much in the same spot we were on Friday, which again is okay, where we haven't seen any downward movement, but it pretty much, to most eyes, it looks a lot like a bearish retracement. NASDAQ actually did show that downward movement, recovered well as the day progressed, but was able to take out Friday's low fairly early in the trading day today. Did sell off pretty heavily. Of course, as we see, the action in today's candle did bounce back pretty nicely. I don't know how much I'm going to take out of that, but one thing I think we can take out of that is now we have even more information that this up here is resistance. As long as we are below here, that is going to be a challenge, at least in my personal opinion. I always like when I see downward movement, because now, instead of me theorizing that that's resistance, now I know there's actually been some downward movement at that price point. So that's coincidentally lines up with just a little bit north of the 200-day moving average. I think from that bearish perspective, that's kind of the current line in the sand in the NASDAQ, for me at least. And from a bullish perspective, again, I'm not saying this will happen, but I'm always trying to prepare for whatever might happen. If we were to break through that, I think we could start to make the argument, well, let's just say that happens over the next couple of days, that we made that higher low, came up and pushed through resistance. That would, of course, be a little bit of a reversal signal, right? So from a potential buying perspective, that price point is pretty important in my estimation as well. I wish we had it in our other indexes as much as we do in the NASDAQ, but it's a start, right? And again, it's resistance. So I'm not saying I'm expecting it to break through that. I just know that I can start to formulate a plan if it does. I don't think we can make the same case with the Dow Jones. However, on the positive note, we've now closed above the 200 for 3 trading days, and we're able to hold above that 20-day. While it's just a little something, it is something, showing some relative strength from a technical perspective. Haven't seen that downward movement or anything like that, as we talked about Friday. Didn't get that today. So really, I don't think we know. At this point in time, does this want to be a V-shaped recovery in the Dow? I'm always going to think no, but of course sometimes that does happen, right? I'm just going to be wrong because I'm always going to expect no to that. But let's see how we react going into the next couple of fairly newsy type of trading days from a broad perspective. Over in the Russell, again, continued to doji for a second day in a row. We know that that's about where we closed, but right at that old swing low on Friday. Really did that here today as well. Very flat over in the Russell at resistance. Didn't see that downward movement. Still waiting for that. Personally, that's where my expectations lie. But I'm going to have to wait another day at least to get it. So really not a whole lot has changed on our charts. But I do appreciate the NASDAQ setting up what I at least believe to be a pretty good level of resistance as a place for us to start as we move into into this week. As we look at our sectors, of course, they're not going to look a whole heck of a lot different. Our material sector was able to hold its own. Not a ton of action really in this sector today, but certainly it did hold up in a day where there's some selling, there was some buying. Really, to me, again, this is going to have to do a lot more. I'm definitely in a chart that's been this bearish. I need that downward move, whether the bears are win it or not. I need it. Then I can, catch a rising 9 moving average. I can put up, a higher level of support and then break resistance, kind of like we discussed about theoretically happening in the NASDAQ. That can get me to change my mind, but I am going to need that. So if this is going to just be one of those that runs up about as fast as it ran down, it's probably going to have to do it without me, unfortunately. Over in energy, a fairly positive day as we continue to trade within this range. We're getting closer and closer to that resistance zone. And I do think it's important that we identify it as a zone as opposed to a number. I would make this line even wider if I could, but it's kind of at the top of that area. Of course, natural gas had a nice gap on the open this week, and maybe that played a part. But really, I think for the most part, we came off support, we held, we had that upward movement. The market's been relatively strong, and we didn't really have any great technical catalysts to push us down, especially once we were able to kind of gain a little bit of momentum on those intraday charts. So watch this area is what I plan on doing. I expect it to be a challenge. I will treat it as if it's going to be a challenge. I'm not going to be surprised at all if it pushes us back down, even all the way back down into support. I remember, back in February and March and April, after that big sell-off in the market, I remember for weeks on end, it just trading within this range. And that doesn't mean it's going to do it again. But I remember I'm not the only one, so I'm definitely going to respect that resistance level. It's going to have to cleanly break that for me to be anything more than play within the range, at least right now. Over on the financials, they did something fairly interesting, I think, the last couple of days. Of course, when we met on Friday, they had broken above that old support level. And again, maybe if we look at this from a weekly perspective, it'll make it a little more clear. This kind of looks like one of those. This should have been a pretty tough price to break above, in my opinion, where we kind of had those lower highs, that breakdown rally back up to that old support to test as resistance. That happened. And that's, of course, what we as technicians expect. But then pushing through on, I guess it would have been Thursday, and then holding it on Friday, although it was ugly on Friday, we talked about it, and it kind of closed right there above that old support level. I think that as long as this is above that, I don't think I'm going to be bearish from a broad perspective in the financials. Even if I see, I'm not saying I wouldn't take individual components if we start to move to the downside. But to me, that should have been more of a challenge. And then carrying that momentum here today off of that close last week, to me, that matters. So for me, right now, I don't think I'll be looking, broadly speaking, bearish in the financials. really until we take out Friday's low. I think that's what I would need to see. As long as we're above this, potentially now failed breakdown point, I'm going to treat it anywhere from neutral to at least moderately bullish. I'm not ready to go moderately bullish in this chart right now, but that price does matter. And I do think that was a big deal from a technical point of view, at least in financials. And I'm definitely going to keep an eye on it. Over in the industrials, I'm not going to say the same thing. This is definitely shaped up to be one of the areas that I do think has, maybe the most, if not some of the most, definitely interesting setups from the bearish retracement perspective. Continued to hold its own today. So, market wide, not seeing a lot of triggers into the downside, but it, unlike, the Dow that's closed above, the 200 for, several days in a row, or, the financials that kind of took out the breakdown point. These guys don't really have much to hang their hat on. They've definitely rallied with the market and they've held up okay. But I certainly haven't seen anything, even tiny little things, to really make me think that they're ready to turn around. So I do continue to like the industrial sector. Is definitely one of my favorite sectors for the bearish retracement, if that's the way that this is going to play out. Same with tech. Of course, tech, much like the NASDAQ, triggered here this morning by a breaking, previous day's lows. Again, much like the NASDAQ, really snapped back and showed a lot of oomph on the intraday to close near the top of the day. So definitely had some buyers stepping in to the tech, but it certainly was showing some weakness. Again, much like the NASDAQ, I think there's a clear line in the sand over in technology. And I think it lines up just a little bit north of the 200-day moving average here, just like it did on the NASDAQ. I think we know that that is a resistance point. We've seen some very aggressive selling off of that high point. We had a nice bounce on the intraday, and I will respect that. But I'm going to respect that knockdown that we got after hitting that high out there on Thursday more, because it's a longer term time frame. So that, I think, is a line of this in the sand from a bearish perspective. If we're looking to trade into some of the retracement candidates that popped up in the tech sector, it's when we have these long candlesticks, because an easy way, and a way that I ideally like to get into my trades, is if it breaks today's low tomorrow. It's easy, it's straightforward, it's pretty cut and dry. If this were to break today's low tomorrow, I would say that that was a bearish entry point. But when we're very far away from that low point, that might be a time where we can go in, if we're looking to go into the trend. In this case, we're looking bearish, into an intraday time frame and look for entries there, kind of depending on your own trading rules. Looking at a 15-minute chart, kind of see we consolidated throughout the day. So again, this is just an example. I'm not saying you should or shouldn't do this, but if we just think about this as a chart and not a 15-minute chart, it's had a nice run to the upside. It's consolidated for multiple candles. Just one way that we could look at it is if it breaks to the downside, that would be a potential sell signal, right? Now, that wouldn't necessarily be enough for everyone to get in, and I'm not saying that it should be, but that's kind of how we can use these shorter term time frames. If that is an entry method that I would use, consolidating, if it breaks to the upside, I'd be long, breaks to the downside, I'd be short. I've said that many times right here in the market recap, just not on 15-minute time frames, right? That could be an entry point. You can do shorter term, you can do longer term. I like hourlies and 15-minute charts, but it's going to look an awful lot the same, right? Consolidating on the intraday, if I'm to see that downward movement, that could be, and again, it's going to be more aggressive, but we're going to get to sell at a higher price if that's the route that we were to go by going that way. So just something to think about. Again, the tech sector really gave us an opportunity to discuss that. I'm not trying to convince you, one way or another, that what you should do, of course. But when we have these entry points that are way down here, I'm going to try, at least if I'm interested, to construct an entry a little bit higher that still fits my technical rules. As we look at the staples, very solid day over in the staples. They'd really been holding up all last week at resistance, broke one day, down the next, challenged at the next, down the next. Today left no doubt. They definitely closed and actually ran all the way up. And we put this line here together quite some time ago, kind of at that next level of resistance. Maybe I should go to a weekly chart so we can actually see it here. It's not a huge level, I don't think. I'm going to respect it, and I understand if there's going to be some short-term selling there, or at least some profit taking at that price point. That was a high point from back in the day. But really the nice thing about this is that's a little level of resistance. You know, it doesn't super concern me. I'm sure some people don't care about it at all. You know, we have, you know, some more resistance levels ahead of us. But one thing I do like about this sector is that there's not a ton of super challenging looking resistance levels ahead of it. You saw things like McDonald's and Coca-Cola, Church and Dwight continue their solid movement. I think all of them put in new 52-week highs today, if I'm not mistaken, over in that sector. So while it is a defensive sector, and I think it has benefited to some degree because of the behavior of the market these last few weeks, you can't argue with its results. Whether that's true or not, the results have definitely been there. It continues to be a very strong sector. Will be something that you know, I would be open to trading from a bullish perspective. And again, if I'm going against the trend of the broad market, I'm picky. I want it to be, you know, I'm going to err on the side of whatever the current trend is. So you're going to have to sell me if I'm going to be bullish. I'm open to it, but you're going to have to sell me on it. That's for sure. Looking at utilities, nice pop today after testing that support level last week. Saw some nice upward movement over here. I still think you can kind of look at this anywhere from that neutral to moderately bullish. We've shown, you know, some pretty good strength. Showed some signs of weakness last week that I didn't really like. You know, falling below the averages, kind of seeing that 9 EMA flip from being bullish to bearish, coming all the way to support. But that support held, and personally, that's my line in the sand. I will continue, and I'm really kind of looking at overall from a, you know, neutral type of position as long as we're in this range. But I can understand the bullish sentiment with, you know, as long as we hold at this support level, that would be the sign of weakness from a selling perspective. I think if we were to take that out, I expect it to continue to trade within this range as it's been wont to do over the last little while. So, but nice bounce off of that support level. I did not trust that support level. And that's okay, but of course I wish I did in hindsight. So looking at the healthcare, another one of those charts that held up pretty well today, but really hasn't done enough to sell me that I should be, you know, anything more than a potentially short-term bull, kind of catching the momentum of the past, you know, overall week in the market. Weren't able to take out resistance. If I could see some more downward movement, then I can start to look at this as an actual level of resistance to be, you know, to be paying closer attention to. Right now, I don't think there's enough there. Obviously, it's something, but really no confirmation through the movement of price and developing of a pivot to kind of make me think it's anything more than just a little something. So that is our short-term resistance. So holding up within these shorter-term averages. I still haven't put in that lower low, so to speak. So really very unchanged over there. I'm still kind of interested in certain things in this area right now, at least. Again, I really need to see the bear step in, whether they win for a day, win for an afternoon, whatever it might be. So many things in the market. That's what I need to see. I need to see us fail at resistance and get market-wide sell signals that we just have not yet seen. Right? People aren't jumping in anymore. The bulls definitely, you know, aren't willing to put their necks out on the line. But you have to call it what it is. You know, the bears, you know, I don't know about you guys, but I found, you know, a ton of bearish retracement candidates, and many is maybe a stretch, but several of them did enough to trigger this morning or this afternoon. But broadly speaking, more of them than not did not, you know, even kind of, you know, hit that aggressive entry point. So, you know, kind of interesting that, you know, there were a lot of bearish retracement candidates out there, a lot of reasons to like them, a lot of good risk to reward ratios. And so many, at least market-wide, were not able to trigger in. It seems like maybe there's a little bit of fight left in these bulls after all. As we look at discretionary, kind of smashed into that 200-day moving average on Friday, very back and forth here today as well, closing below the 200 and above the 20. Again, didn't quite see that downward movement. We were able to see that intraday support from Friday hold as intraday support here again today. Definitely can see wanting to be bearish in this area. Generally speaking, I definitely need to see it at the very least take out that intraday support, which is now 2 days worth of intraday support, before, you know, I'm just going to start to be seeing, you know, the sector-wide confirmation. Certainly going to respect that 200. It's not been holding up generally as well with the volatility in the market, but we're starting to see things maybe simmer down a little bit, right? We haven't seen quite as many crazy days. Sellers didn't go nuts on Friday. Yeah, they sold, but they weren't going quite as crazy as they were the previous Friday. We're maybe starting to simmer down on the volatility front, or maybe it's just everyone wants to wait for the elections. I guess I'll have to wait and see, but definitely that intraday support over the last couple of days is our first line in the sand. If we're looking at this from a bearish perspective, that holds, well, then it's got fight in it, right? We'll see where we find ourselves with them tomorrow. Over in real estate, they continue to be very difficult for me, but in hindsight, so simple. They hit that trend line and they pop off of it. They run up, and now they smash into the 50-day moving average and are testing that as resistance. Once again, for me, again, a buy signal would be a close above that. That's going to put me above resistance. That's going to put me above that 50-day moving average. Hey, I'm happy for anybody who's in it here today or able to jump in off of that intraday low on Friday. But we are at resistance. Certainly, we've seen this price point cause it trouble on several occasions now. The 50-day moving average sitting on top of it's not doing it any favors from a bullish point of view. I expect this to be a fight. I do think that if that were to break, that would at least be a signal. I don't think it's the type of signal that I would jump in, first time it happened personally, but I would get it. I would certainly get it. And I know some people have been bullish within this sector, and so they probably would like that, right? Obviously to make some money on appreciation, but also getting more confirmation that the bulls are in control over here. So it'd be interesting to see this fight. It's constantly lost. It's had a lot of trouble over here, especially the last little while. But it'll be interesting. It won't be boring in real estate. Of course, it'll probably sell right back down to that trend line and hop right off it again. And I'll be saying the same thing on Friday. I've not had a good handle on it. So as we look lastly at the communication services, no shock here. Little bit on the downside, not a ton of things changed today, but we did take out Friday's low, much like the NASDAQ, dropped down, rallied a little bit, didn't rally as strong as tech or as the NASDAQ as a whole, but did rally off of that low. I do think, again, if we take out this support level, this intraday support level tomorrow, more bearish confirmation to the downside, and more confirmation that this high point is a resistance level that we definitely want to take note of. So that is certainly something that I think we all should be keeping an eye on. Whether or not we're playing anything off of it, of course, that's our own business and our own trading rules and styles will determine that. But I do think that is an important price point in the shortest of terms over in the communication services sector. As we look at the dollar, really kind of just a day, went up, went down, closed relatively flat down, 0.16 on the day, so nothing substantial. We did that nice movement off of 96, off of that 20 here on Friday. Did enough to get some confirmation by breaking, Friday's high today, getting some people in. Hasn't done anything wrong. If I had traded into this, getting in as it broke yesterday's high today, I'd be okay with where it was. I obviously liked it better at its high, of course, but as long as we hold this 96, I think that is clearly the number that we need to be looking at. Over on the dollar right now from a swing perspective, 96 holds. It should be an interesting price. If it breaks all of a sudden, well, I wouldn't want to be a fool if that were to happen. But and I'm going to assume it's going to continue to fight until it actually does happen. Our trend is, of course, very strong. And while, again, I say this a lot, anytime we trade in something, we immediately want it to go our way, smooth sailing. Of course we do. We're not crazy people, right? But it doesn't have to. It's always important to ask yourself, did it do anything wrong? And in my opinion, at least, it's really no different today than Friday. Its candle looks a little bit different, but technically, I don't think we've changed one bit in the last couple of trading days. As we take a look over at gold, what do we expect? A lot of little, right? And to no one's surprise, that's exactly what we got. Continue to go back and forth at this resistance level. Continue to trade within this trading range. No surprises, right? The surprise would be we took out or we broke down, right? One of these days we're going to say that, and it's going to be exciting. But of course, anytime we're doing something, the most logical thing is that's what we're going to continue to do, right? And of course, gold continues to fall right into that, still using the same level of resistance as we, of course, have been using for a little bit now. Over in silver, dropped down a little bit, but again, much like gold, really nothing has changed. You know, I still think for me, the buy is above 15. I think, you know, from a buying perspective, anywhere in this range makes sense as long as the signals are there on the time frame that you're using, as long as we hold support, which of course we continue to do so, but we're kind of stuck sideways. And that's why I generally like to get clean breaks. You know, it's easy to say in hindsight, but, you know, we get stuck in a range. And while that might be a good thing from a directional point of view, good chance that maybe I bought, you know, was buying call options or something like that. If I was cash flowing, selling covered calls, doing out of the money credit spreads, things like that. It's been a really good market. But from directionally, we just had those handful of opportunities that I would consider good trades. And they happened so quick that if you weren't really right there looking when it happened, you kind of missed. We had that really nice first test of that little breakout point. But again, it happened almost all in one day. And that's where we got all the profits. We drifted up a little bit more, but it all happened. Most of it happened on that first day. And of course, last week, pulled back, didn't really have any opportunity to doji or show us a small candle or anything like that, just popped. Intraday, those opportunities were there, but if we weren't looking at it intraday, it was very difficult to trade directionally. I don't think anybody will be, you know, too unhappy when we do come out of this range, at least directional traders. I know a few cash flow traders are saying, hey, let's stay in here forever because this has been pretty easy. There's been a couple days that maybe, you know, made me think a little bit, but most days, oh yeah, nothing. That's my kind of day if I'm cash flowing, right? As we take a look at natural gas, nice strong gap to start the week off, and it just kind of kept running. I hate when this happens. We've talked about it together for several weeks. Our signal would be, you know, my signal at least was a break above resistance or below support. My signal happened. It did break above resistance, unfortunately, in the form of that gap, which made it very difficult, of course, to trade. We're pretty extended to the upside. I will maintain an overall bullish posture, of course, on natural gas. However, I would want to some sort of a pullback now. You don't control the way it breaks out. You know, it's a funny thing. If we're talking and it just closed right here above that, we're probably at least thinking about going long. But, you know, it gaps up and it really built off of that momentum on the gap, just kind of kept running for the most part. Very difficult for me, at least, to buy off of this. Maybe if we pull back into, you know, the bottom down here, maybe these moving averages will catch up. And we'll be able to bounce off of a 9 or a 20 or something like that. Obviously, if you're in it, you're very happy. If you've been a bull, you're not terribly surprised that it went up. But yeah, that gap definitely, you know, took out my breakout plan. That's for sure. So, such is life. Such is life. And lastly, looking over at crude, to no one's surprise, I mean, this is just going to have a hard time getting going again. I mean, it really is that simple. Anything can happen. Tomorrow it can go crazy on the bullish side. But from a reasonable perspective, why? It's complete. There's really nothing bullish about it right now, technically speaking. Everything is bearish. All signs point to the downside. As we looked at on Friday, I mean, we can catch support anywhere, but we don't really have any major levels of support till we get down into that 58 or 59 range, still several dollars away from here. All the moving averages are down. We're below everything. If we go in and take a look, even at some shorter term timeframes, it's just going to look worse and worse and worse and worse. And so right now, again, well, hey, tomorrow maybe it just goes crazy on the bullish side. If it does, so be it. All signs, to me at least, are pointing bearish, and nothing but bearish over in crude right now. I don't think I'm alone in that. I maintained that pushed up a little bit, but hilariously, as is so often the case, kind of ran right back up, tested that old breakdown point, and then the intraday completely flipped, and we closed very bearish on a pretty bearish looking candle, right? Selling way off of the highs and closing almost at the low point of the day. I mean, there was a lot of selling pressure as this candlestick developed. But again, of course, I mean, if you're buying, if you were one of those buyers today, the first sign of trouble, you jumped out. You were an intraday trader, right? You weren't, you know, some crazy swing trader trying to catch the bottom on crude with no signals, I imagine. We're bearish. And at the very least right now, I think you have to stay bearish until we get back above that breakdown point at the very least. Now, that wouldn't get me bullish personally, but that would be the first sign. And then a super aggressive bull, I could get it. If it were to take out and get back on the right side of things, I would understand it. I wouldn't get it. I wouldn't be on board with it, but I would understand that perspective. As long as we're holding this breakdown point, I'll be looking for opportunities on the bearish side in crude, or no opportunities at all. It definitely has to get on the right side of some of these things before we start to be thinking about being a bull again. Really nasty chart, that's for sure. So, I mean, not a ton of things changed dramatically today. And on the one hand, that's kind of boring, you know, but on the other hand, it's better to see that, you know, we kind of had a flat day, weren't seeing a bunch of things, you know, trigger us in, at least speaking for myself, to the downside. I obviously wasn't going to trade every bearish retracement setup I found, because that would have been crazy. And I found a lot, and I would have been very heavily weighted to the bearish side, no doubt. But you know, again, broadly, that didn't happen. We did have certain things, of course, triggered to the downside. And as long as they continue to, you know, hold below resistance, I'm cool with that side of things. But I am kind of glad that we didn't have it happen market wide, because, well, everything's been so tight, right? The market's been so tight, super bullish, super bearish, and maybe it seems like maybe to me is starting to think about simmering down, but that doesn't mean it has, and that doesn't mean I'm right. So we still have some interesting bearish opportunities, and there's still some interesting bullish opportunities out there as well. If that's the way this thing breaks, you know, we've seen some breakout candidates. You've seen some things doing all right out there. So of course, as traders, our job is to be prepared, right? Nobody knows what tomorrow is going to bring, but we can be prepared for tomorrow. We always should be. So we will continue to follow this as the week develops. We'll see how the election impacts us. Probably not realistically until Wednesday, but it might have some impact on the day-to-day tomorrow. We'll have to wait and see. But I think Wednesday will be the day that we kind of digest it, so to speak. So that, ladies and gentlemen, will do us for today's market recap. But certainly, as always, it is my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the channel and hit the notification bell so you can always be alerted to anything new that we've got going on over here. And be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we find interesting throughout the market day. If you enjoyed the market recap, it's always helpful and appreciated if you give it a thumbs up to let us know that we're on the right track. Thank you so much for your time, everybody. Get out of here. Happy trading, and I will see you in the next one.